W.Bradley Cooper, the CPA. I want to talk a little bit today about the importance of good record keeping and keeping a good set of books. Before we start talking about keeping a good set of books, we need to talk about the accounting method which we are going to use to keep those books. Usually the question is, should I keep my books on the accrual or the cash method of accounting? Let's talk a little bit about those two methods so that we have an understanding as to what those are, so we can make a decision as to how do we want to keep our books. First, the cash method of accounting. That's the simplest method of accounting. It simply says we are going to record in the books the sales when we deposit the sales or collect the sales. Now, many times we use those terms interchangeably. It's not quite true. We might collect some sales today and deposit them tomorrow. But if we use the definition of collection and depositing at the exact same time, that's going to make our bookkeeping a lot easier. So if we're going to record our sales on the cash method of accounting, we record them when they go into the bank account. Expenses are going to be exactly the same way. We record those expenses in the day that we write the check, not necessarily when the check is written. However, the accrual method of accounting goes along those same principles. But the reason that we have accrual is this. It more closely matches the timing of income to the reporting on the tax return, and the timing of expenses for the timing of income to the reporting on the books, and the timing of expenses to when we put them on the books. Let me explain. You may do a job today and bill that job out today. And let's say today is the 25th of the month. And you get paid on the 3rd of the following month. When do you report the income? Do we report that income in the month it was generated, which is month 1? Or do we record it in the month that it was collected, which is month 2? For many service industries, we like to record that income in the month that it was generated, because I want to know what months I am busy versus what months I am not busy. I'd like to know that much more than I would what months are good for my customers to pay me versus what months are not good for my customers. So if I record my income when I earn it and not when I receive it, then that is on the accrual method of accounting. And that method of accounting gives us a better idea of what our sales are by month. Now, the same thing applies to accounts payable. If I incur an expense this month and I pay it next month, when do I put it on the books? On the cash method of accounting, I put it on the books when I write the check. On the accrual method of accounting, I put it on the books when I incur the expense. Now, the accrual method is a much better way to record the expenses on our books, simply because it gives us an idea of what our expenses are each month versus what our expenses are when we finally decide to pay these bills. In reality, with expenses, most of us are going to pay our bills every month. Our rent bill is going to be the same amount every month. So our rent expense is going to be the same whether we report on the accrual method or the cash method. Our phone bill and our utility bill and other bills are going to be exactly the same or very close to the same, regardless of whether I report on the accrual method or whether I report on the cash method. Therefore, most businesses report their income on the accrual method of accounting, but they report their expenses on the cash method of accounting. Now, the next question is, if I report my income on the accrual method of accounting and my expenses on the cash method of accounting for my books, do I have to report that way on my tax return? And the answer is no. And many times we do not want to report our income and expenses on the accrual method of accounting. But there are some times that we do want to. So let me explain. If we report our income on the accrual method of accounting on our books, that is going to include sales made for the month or for the year that have not been collected yet. So if I want to report my sales on the cash method of accounting on my tax return, then I would simply take the total sales plus or minus my increase or decrease in accounts receivable to arrive at my cash sales. Let me give you an example. Let's say that my total sales for the year were $10,000. And I noticed that my accounts receivable at the beginning of the year was $2,000, and my accounts receivable at the end of the year was $3,000. Therefore, I see that my accounts receivable went up by $1,000. That $1,000 is included in my accrual sales. So to convert from accrual sales to cash sales, I simply take my accrual sales of $10,000, subtract from that my increase in accounts receivable of $1,000, and I can arrive at $9,000 in cash sales. That's how we would make the adjustment from our books to our tax return to convert from accrual sales to cash sales. Now, if I'm keeping my books on the cash method of accounting for expenses, then I simply report those expenses on my tax return as cash expenses. And now I'm reporting my income and expenses to the IRS annually on the cash method of accounting. May I add right now that once you choose your method of accounting for filing tax returns, you cannot change. The IRS requires that if you want to change the method of accounting, you must file a form asking to change the method of accounting. So you want to make sure that you make the right decision in the very first year. That's when you elect how you're going to report your income and expenses. Regardless of how you file your return, whether it is a sole proprietor, a partnership, or corporation, there is a box on each one of those forms that's going to tell the Internal Revenue Service how you are filing, either on the cash method or the accrual method. And once you choose that method, you must stay with it unless you get permission from the Internal Revenue Service to change. Now, if you file a corporate or partnership return, there is a section on the form to report to the Internal Revenue Service the balance sheet, the assets, the liabilities, and the equity of the company. There, we are supposed to report the balance sheet based on the books that you keep using the method of accounting that you have chosen. So if you've chosen the accrual method of accounting, then we report the balance sheet on the accrual method. However, as we've already pointed out, it shows accounts receivable and possibly accounts payable on your books and therefore on the tax return. So there is a schedule to convert your accrual income to cash income right underneath that balance sheet, and it is called Schedule M1. On Schedule M1, we start off with the income based on the method of accounting that you keep on your books. Then we convert to the cash method of accounting. Now, can we keep our books on the cash method of accounting and convert to the accrual method of accounting? Absolutely. Nothing wrong with doing that. Although we've found that most people, especially service businesses, will keep their books on the accrual method of accounting and their expenses on the cash method of accounting. Now, the next question is how do I know which method I should use for my tax return? Now, we've already decided which method we're going to use on our books because we want the method that is going to give us the information that we want, and we're going to keep our books on that method. However, on the tax return, we want the method that is going to generate the least amount of income so that we can report the least amount of income tax. The way we make that decision is this. If we report on the accrual method of accounting, then what we are doing is we are reporting uncollected income on this tax return and deducting unpaid expenses on this tax return. If my uncollected income is more than my unpaid expenses, then I probably want to file on the cash method of accounting. However, if my unpaid expenses are more than my uncollected income, then I probably want to file on the accrual method of accounting. Now, in year one is when we make that decision. So we need to make that decision carefully in year one, not only based on the information on year one, but what do we think is going to happen in year two and subsequent years? If year one shows unpaid expenses more than uncollected income, but we suspect that that's a fluke in year one and it's going to reverse that amount in year two and subsequent, even though it might be detrimental to report on the cash method of accounting in year one, it's certainly going to be advantageous in year two and subsequent. So make that decision carefully in year one when you file your tax return. Now that's enough about record keeping and how we're going to keep those records. Let's talk a little bit about why we want to keep good records. One reason is so that we can prepare an accurate tax return. We want to be sure that we have a system in place that is going to capture all of the expenses that we can report on this tax return. We don't want to take any chances that we have lost some of those deductions either by forgetting about them, not recording them in the correct place. We want to be sure that we're taking all the deductions that we can so that we can reduce our tax liability. But that's not the only reason. Another good reason is for business purposes. You as the owner want to measure your business as to the profitability, not only what it is, but where it's going. Let me give you an example. Let's say that we prepared financial statements at the end of year one, and we can see what the income is and what the expenses are. One thing that we might want to do is we would want to look at the different income streams that your company has. For example, in my company, we do income tax returns and we do bookkeeping. We also do other things. So on my financial statements, I have a category for income tax returns for individuals. I also have a category for income tax returns for businesses. I also have a category for bookkeeping work and other categories for some of the other major lines of business that we do here. Now I am curious as to the makeup of my business in year one, but where this becomes very valuable is in year two. In year two, I might want to compare my individual income tax business in year two with the amount that I did in year one. I would like to know, am I growing and getting more customers in year two than what I had in year one? And this would be an easy way to look at that is by comparing my individual income tax return preparation fees for year one to year two to see if I'm growing. And do that with all of the other income categories I have as well. That's one good use of these financial statements. Another good use is comparing my expenses in year two to year one. If year two's insurance expense went way up versus year one, I might ask the question, why did that happen? Now, once I understand why it happened, then I could ask myself, is there something that I can do about that? What steps can I take to reduce those expenses in the future? A very valuable reason for having financial statements is comparing the information in year two to year one and year three to year two, and you can see the process that we're going for. However, if you're a new business, you may not have any prior years that you can compare to. I hope that you have spent some time doing a business plan and preparing to start your business. Now, part of the process of a business plan is coming up with what you think your sales are going to be in month one and what you think your expenses are going to be in month one. And do the same for month two and month three until you hit month 24. Now, that is valuable information in that you need to know, when do you anticipate making a profit? And do you have enough cash to fund this business until it makes a profit? That's one thing that you want to do. But the second thing, as it applies to what we're talking about, is that now becomes your budget. So you can compare your actual expenses and income on the financial statements to your budgeted income and expenses. The beauty of this is it allows you to compare what you think is going to happen to what really happened. And then you could ask yourself the question, why? Why did my sales exceed what I thought that they were going to be? Whatever that answer is, you want to make sure that you do that again next month. Or why were my sales not as high as what I anticipated? Once we understand the answer to that question, then we can go out and do something for next month to make sure that those sales increase the way that we want them to increase. So another valuable reason to have financial statements is so that we can compare our actual numbers with our budgeted numbers. Now, we don't have to be a brand new company to compare with budgets. Just if we have a brand new company, we should have a budget already prepared that we can make these comparisons with as you prepared your business valuation. But preparing budgets and comparing them with actual figures, regardless of how old it is. These methods that I've been talking about, the accrual method or the cash method, apply to every business in the country. However, there are some exceptions. As with everything, everything does not fit in a square round hole. There are some businesses that have some edges on them. One such business is a business that starts a project in year one and completes the project in year 2 or subsequent years. When it comes to small businesses, the example that I think of first are home builders. Many homes take longer than a year to build. Some don't take quite as long as a year to build, but they might start them late in the year, such as September, and finish them early next year, such as March. Now, for those businesses that applies to, this is how they would do their books. They would still do their books on the cash or the accrual method of accounting. That doesn't change. But when we do our tax return, we are not going to report the income on those uncompleted projects in the year that we are filing our tax return. Those amounts will be carried over to next year and reported as income then. And what we will do is we'll reduce the revenue for this year and call it customer deposits. It will become a liability on your books. And the direct expenses such as materials and labor, those expenses won't be deducted this year either. They will be deducted next year when the project is completed. What we will do on your books is we will reduce those expenses and call them inventory. That way, we can record the income and expense and profit of those projects in the year that they are completed. The method of accounting that we use for that is the completed contract method. Some of these rules can get complex, and as you can see, these rules can affect when and how you report your income and expenses on your tax return. I would recommend that you find a tax preparer who understands these rules as I've explained them to you, and at least these rules, so that you feel comfortable that they know what they're talking about. Many tax preparers have no training in bookkeeping. They start with a small tax preparer, they learn how to prepare taxes, they go out on their own because they think they can make a lot of money on their own preparing tax returns, and they've never prepared a set of books for a company. Please find someone who understands these concepts and can apply them in your particular situation so that you can save as much taxes as possible. We do books for customers all throughout the country. If you would like us to assist you, we would be happy to do so. But there are many qualified people who can do books for you in your location. So I would encourage you to either find one of those or seek us out so that we can help you. Make sure that your books are kept in a complete and accurate format so that you can compare your numbers with last year's numbers, with your budgeted numbers, so that your tax return is going to be prepared accurately and on a timely manner. and that all deductions that you're allowed to take can be deducted. I hope that I've answered your questions on how to keep books. If there are some additional questions that I have not answered, please email me at bradley@wbcoopercpa.com.